Hello traders and welcome to another video analysis. Today is Tuesday, January 4th, 2022. Let's take a look at the Forex calendar first. On the second day of on second trading day of 2022, there is some data kind of interesting for all of the traders. The first thing is that some data had been released already, like a market final manufacturing PMI from China. Those data had beat the expectations because the actual reading was 50.9 versus the 50.1 expected number and the 49.9 previous reading. So the manufacturing PMI is rising. The same situation is with the PMI manufacturing index from Japan is slightly better than expected, figure of 54.2 and the previous reading of 54.2 as well. During the London session, we got data from the retail sales in Germany, beats the expectations, 0.6% versus minus 0.2. CPI from the Switzerland, and as you can see, we got plenty of employment data from Germany, unemployment rate and unemployment change are scheduled for release 5 to 10 during the London session. Some data from the UK are scheduled for release at 10:30 as well. Money supply, mortgage approvals, net lending to individuals, and of course the PMI manufacturing index. During the New York session, we got the key event of today, ISM manufacturing data from the US, scheduled for release at 4 o'clock, but a little bit earlier, 30 minutes before the ISM manufacturing is being released from the US. RBC manufacturing PMI from Canada is scheduled for release as well. Together, these two events are the key events for today. So I think we should take a look first on the US dollar index to see what is going on there. The US dollar index daily time frame chart is showing us some signs of strength. Why? Because recently we just have a bounce from this level here, which is 95.50, the lows of the last day of the November 2021. This low was just a little bit pips away from this in technical support. We got the bullish engulfing pattern here, very clear pattern, and today the next candle is it looks like a green one. However, of course, this is the time frame chart and we haven't closed the candle yet. So if we zoom out, we can see that this is typical for this market, impulsive price action with possible wave 5 on the top, and this is clearly ABC corrective pattern. If it's not ABC, if it's something more time and price consuming cycle, then of course it can be W, X and Y. The point is that this is clearly a corrective pattern, corrective cycle. So overall we are still in an uptrend in the US dollar. As you can see here, we are out of the channel. However, right now we are back a little bit towards the upper channel boundary. Nevertheless, the next target for the bulls is 96.61 and 96.90. If we break above this level, then we have new high for the year 2022, and this will be the highest level since 2021. There you go. This is 2021. So again, very interesting thing. I've guessed that the next target for the bulls, next long-term target for the bulls, are the highs from 2020 at the level of 97.77. So this is the last horizontal red line on this chart. Momentum is bouncing up, so we can have pretty much a nice rally if this, of course, situation will be totally used by the market participants. US dollar index looks like that. Let's take a look at some pairs with the US dollar, because there was some data from Japan. Let's take a look at US dollar to Japanese yen. As you can see, our current scenario has been invalidated, clearly invalidated. So right now it looks more like that this was a corrective behavior here, and in the wave down. So maybe, just maybe, this correction has been completed here. Right now we broke above the Fibonacci target, so right now we are heading higher, and it looks like we can label this again, this last move to the upside with some impulsive wave. As I said before, that would be wave 1, that would be wave 2. Currently we are developing wave 3, wave 4, and wave 5. Of course there will be 1 degree less than this one, right? So this is not minor. Let's say it would be minuet. Okay, so that's the wave we are developing right now. That's the degree of the cycle, to be more precise, that we are developing right now. That's the old wave 3 top, so that will be technical support, and that's the same situation here. This one is now green, 114.57, and we are of course going up in the wave 3. So momentum went almost parabolic, so these levels are now extremely overbought, above 115.52. let's see if we can find some target levels for this for the current wave, for the current upwave. The current upwave is of course wave 3. Let's do the classical Fibonacci based extension from the wave Y measured from the bottom of the wave 2. So this is something that we already have, but as you can see, 161 is it enough? There you go, 115.93. this is the typical range for this kind of movement. We got the 200% as well, so we will leave it here. So the typical target for the wave 3 might be 161, so that might be the top for the wave 3. Let me just put the wave degree back on, so we can start thinking about this kind of a pattern developing here on the US dollar to Japanese yen, and that would be then the wave 1 here of that cycle. However, I think I will just right now change the cycle to the same one. It looks way better right now. Of course, this is some kind of a correction, whatever you call it. It's still corrective cycle. So that's the US dollar to Japanese yen. Let's take a look at the British pound to Japanese yen. And the British pound to Japanese yen looks like is going up as well. For now, we are still measuring this movement as a ABC correction. Why we are measuring this as ABC correction? Because as you can see, the trend is still up. However, it doesn't actually look that impulsive anymore. The clear the demand zone, the most important demand zone has been defended, and right now we are bouncing higher. Of course, let's just take a closer look here on this current situation. So what do we have here? ABC is completed, 161%. That's fine. However, right now we can assume that there might be some sort of the 1, 2, 3, 4, 5 impulsive wave progression. However, this wave here, wave A, doesn't look that much impulsive, which is why I will keep the ABC wave progression here. I will change this technical resistance to technical supports, of course, because the market has broken above this levels, and right now we are, this one is not that much important because it should be somewhere here. So that would be the technical support, and of course all of this lower technical levels and the Fibonacci levels are now not that much important. If we break above 156.37, that would mean this is wave 1, wave 2, wave 3, and we are developing possibly in the nearest future wave 4 to the downside, and then the final push towards 158.19, which is the swing high. The market looks pretty much overbought, however it's not yet extremely overbought, which is why I'm still keeping ABC correction to the upside, because it might be only a free wave to the upside into the overbought market conditions and then sell off. So any breakout above 156.37 is of course bullish, and this scenario is going to be replaced with 1, 2, 3, 4, 5 impulsive degree scenario. Okay, so that was the British pound to Japanese yen. Let's now take a look at the Ethereum. Ethereum is of course trending lower, and as you can see, we got this complex and time-consuming correction here. Apparently, it doesn't look as anything that is easy to count and easy to analyze. This is very complex correction. This one looks like the wave B triangle. So we have the wave A to the downside, wave B triangle, breakout to the downside in wave C. However, it doesn't look that the wave C is completed now, and we should see lower price levels on the Ethereum towards the lows of the wave W, somewhere here around 3,400, $3,500. So maybe the level of 3,358 is the target for the wave Y. In that situation, we will have completed the nice corrective cycle, partially December, partially January corrective cycle, and the market will be ready to rally after the correction is completed. Behind us in the background there is still the uptrend. I'm just wondering about one thing. Let me just take a look the price range of this last correction. As you can see, this correction is 33%, let's say 33, 35, maybe 34, 40. Okay, 35%. How big is the last one? The last one is 29%, 29, yeah, 29, 30%. So they are about the same-ish, because this one is 5% bigger. So this correction is still a part of that move up, and there is no overbalance on the Ethereum. So the market can be still considered as the rising market in the uptrend. Okay, so that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.